Good afternoon, team. We are live right here on Facebook. Drop your comments in there. Let's say hey, if nothing else. Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Mr. Lisp right now because I have plastic in my mouth that I have to wear constantly. Some interesting things going on today. Want to follow up on the move that we called in mortgage bonds. We're going to look at that. There's a new long-term capital gains tax story that sort of fluttered around today. And although nothing official has happened yet, there's definitely enough rumors to move the markets. And, kind of what does that mean? Overall, a little weakness in stocks is good for mortgage rates, and that's definitely what we saw. So let's take a closer look. Okay. So, team, we got this like 100% right. The last time that we locked was off of this really bad candle right here, which was super scary. We were wrong about that at that time. We're not quite to a float down yet for everyone who locked at that time. We still have another 30 or 40 basis points to go. So we weren't off by that much. But this move here, a couple days ago when we saw this happen and we said, hey, don't lock a thing. Well, today was the day to pull the trigger. And the reason is because we run into this resistance here, and it's very likely that we're going to head this way next. So just a quick reminder, this is mortgage bond pricing. As you can see, prices have been going down. When mortgage bond prices go down, rates go up. So we want to see mortgage bond pricing go up like they have been here the last couple weeks, because that will help rates go down. So that's the goal. That's what we're hoping for, right? We want lower interest rates, don't we? So most likely bouncing off of this resistance, even though this 236 is not that great of a resistance indicator, most likely we are going to see at least some sort of pullback here. And then we could go through and bust it, but it's unlikely that we'll just barge right through it. See how it took, 3 tries here to get through this level of resistance, which was the 50-day moving average. It's a pretty big deal. All right, that's a 50-day, right? Yeah, it's a 50-day moving average, which is a pretty big deal. So, it took 3 knocks to get through there. Maybe it'll take 2 knocks. Maybe it'll take another 3 knocks to get through this one if we're going to head higher. If we do, it blows everything open. It opens up a lot of things to be really, really good. That purple line there, by the way, is the 100-day moving average, and the 200 is up there. So we got the 200 up here, the 100 right here. So we've got some headwinds if we can break through this 236 on the Fibonacci. But today was kind of like the perfect day to lock because, you know what? Hedge your bets. Listen, we're right at the crest here. We've had a great run. Look at this run that we've made here. We made a great run. We've run into some resistance. Probably isn't going to be, rates are probably not going to be better tomorrow. If they are, hey, float down your purchase if you get a big enough of a move. But rates really, really good. Seeing a lot of loans locked in the 2s. Lower credit scores right around 3 for like FHA, VA. Good credit scores, mid 2s. Conventional loans are high 2s to low 3s. So you still have really, really good rates right here. But a breakout, if we can get above all this. So this is where it really becomes home for you. Like, hey, well, Derrick, how do we get back to the all-time, lows in mortgage rates? We've got to get up to this blue line right here, which I'm going to turn green. We got to get up to here. That's where we were. So it's a long ways to go. So if we can beat this resistance and these 2 moving averages here, it's home free. We're headed there. We're going to get there. But we've still got those 3 hurdles to get over, and it's going to take a lot of sustained action in order for that to happen. So a couple things. Stock market has had a bad couple of days. And notice that whenever bad news comes out, you look back at the previous day in the stock market and you will see that someone knew what was coming. It's every time this stuff happens. It's so ridiculous, but it is what it is. So Biden capital gains tax plan for rich expected to pass, but with some changes. So what they're talking about here is totaling 43.4% for the wealthiest taxpayers earning $1 million or more on long-term capital gains. That's what they're looking at. And I think that, it's probably going to happen based on the political climate, the way things are structured right now. A lot of people not happy about that. That's a pretty big chunk if you think about it. That's a pretty big chunk. But how many people does this apply to? Listen, no dissing, just listen. Do you make $1 million or more a year? Some of you might. That's a lot. That's not going to apply to most people. So, but the question is, what will those people who it applies to, what will they do as a result? Will they make changes about their investments? Will they buy more real estate? Where it's much more tax friendly than stocks. But anyhow, that is what's caused the scare in the stock market, which, if we go back here and take a look at this thing, or not. Oh my goodness. Down 321 in the Dow, down 38 in S&P, right around 1%. You can see, look how uniform that is. Down 0.94, 0.92, and 0.94. That also just reeks of, systematic selling, computers making trades. Is this, and also, by the way, the run in bonds began days, weeks, maybe even a couple weeks prior to getting this news that's been softening the stock market. And, so bond guys, the bond traders know a lot more information than anybody else. They are much more dialed in. It's a much bigger market. This, I think, is just sellers getting out of the way and letting the Fed do their thing. If you just let the Fed buy bonds, they'll go up. We had a lot of sellers in there that were getting out of bonds, and that was what was causing the problem there for a couple months. So today was kind of the perfect lock day. If you rolled the dice today, you really rolled the dice, because most likely rates will be worse tomorrow. But if I'm wrong and we break to the upside, hey, there's a nice chunk of gains there. There's almost 50 basis points of upside right there, between here and here. So you could get a lot of upside there. One of the things we look at on a rate lock, though, is how many basis points do you need to get to the next eighth? So if you're locking at 2.5, but it's 70 basis points more to get to 2.375, then you go ahead and lock, because that's a big move. Bonds aren't going to make moves that big very often. Like in this case, even if we got the best case scenario, we're going to get 50 bips. So in the example I just gave you, it still wouldn't make sense to float. You want to go ahead and pull the trigger. If you like it, lock it. If you get the opportunity to get a low rate, no points, and no fees like we charge for FHA and VA, then, I'd say pull the trigger. It makes a lot of sense right here in this scenario. There is one other thing I wanted to bring up, and this is just an FYI. Keep an eye on this, okay? You're starting to see a lot of positive things. Listen, I know I look at CNBC and people are like, you always complain about it. Why do you look at it? Because I know what it is. CNBC, I know what their objective is politically. I know who funds this site and this channel, is Wall Street. I know all that stuff. So if I know all that going into, I'm not just blindly reading the articles going, this must be true. As long as you're not doing that, you can take the information that you have and use it to your advantage. I know that CNBC is a marketing / propaganda arm for Wall Street. Just look at all the commercials. If you watch CNBC, who's advertising? Okay, it's Wall Street. They run this thing. Without their money coming into this thing, without their advertising dollars, this thing doesn't exist. So knowing that, I pay close attention to a lot of the headlines in particular, because we know that people mostly just read headlines, and they can get away with a borderline headline, but then make the content of the article legit. And that happens a lot. Well, you read the headline and you're like, oh my goodness. And you read it and you're like, this doesn't come through. There's no follow through in the article with what's said in the headline. I've been seeing a lot of headlines that are positive on stocks. I was going to see if there's one or two today. I just keep, like you see things like that. But investors shouldn't be shocked that Biden wants to raise taxes on the rich. Hell, you shouldn't be shocked about this, this new thing coming in. There's been a lot of positive things on here. Like the one from yesterday, there was a couple, and it said, the stock market rally has just begun. Or, I saw another one the day before that, I believe, they said, the stocks have a long way to run before they get to a top, or before we see a crash or something like that. So I'm starting to see lots of positive articles about stocks. Now, there's certain funds, ETFs and stuff like that, they always want you to invest in the stock market, always. But there's also, some concern about, okay, well, they always try to tie it to something. Like, for example, today you could say, well, look what they're doing. Stock futures tick higher after concerns over capital gain tax hike prompt selling. they're trying to make you believe that they know why the market sold off. How could you possibly know that? If maybe you talk to one or two hedge fund managers, maybe and they're saying this is why we're selling. Maybe why they're actually selling, we don't know. But the news site always tries to tell you that they know the reason because they want it to make sense for you. Now, if it's the case that big money was selling their stocks right now and they want you to buy them, they would do similar things. Okay. I'm not saying that's what's happening, but I'm saying, let's keep an eye out for this. Let's keep an eye out for this because the propaganda just in everything has gotten so overwhelming. You can't trust anything. I mean, I almost clicked on a phishing text today. They're after me like crazy, and they're getting better and better at it. And this propaganda, news sites, you just have to know where they stand and just take it with a grain of salt sometimes. Just know what they're trying to accomplish or know what they might be trying to accomplish. Know who they're working for, at least. And if you know that, you can make some better decisions about, all right, was this information, really worthy of me taking any note or doing anything about it? Or should I actually be a little bit more guarded because they're trying to tell me that the selling is happening because of this, but is that the real reason? They want it to make sense. They're also, this is coming after, we've had 2 or 3 days in a row down. This is coming after a bunch of these articles saying that stocks haven't stopped yet. So coincidence? Could be, but let's keep a close eye on this. Stocks are due for a breather. They're getting one right now, a very healthy one, slow, like I said, 1% a day, 0.5%. That's great, especially great for mortgage rates. But we got to be careful here, and we got to be careful. Let's just put it that way. It's hard for big money right now to manipulate the market lower because the stocks that are leading the market are strong. There's strong outlook and growth potential for the Teslas and the Amazon and, they're the big stocks that are really moving the market. So it's hard, unless you can knock those stocks down, it's really, really hard to manipulate the market lower. If it's the case that one of those stocks gets some bad news or has a rough quarter or has a scandal or something, then it's much easier to knock the market down. And, we very well may see that. But I don't think that's what the goal is right just yet. If I'm right about stocks potentially taking a big dive this year, the one that they probably should have taken last year, then it won't look like that. It will look more like this. And that's why I'm mentioning this. It will look more like this. Big money slowly selling off what they have while trying to get you to stay committed to purchasing. And so, again, I could be completely wrong here, but right now it looks like a duck. So we're going to talk about it. And while we're reaping the gains over here and things are looking great, rates are in great shape, be careful with your stock portfolios. Okay, it might be a good time to rebalance. Might be a good time to pull a little cash. Talk to your financial advisor. I'm not one. Maybe, time to rebalance a little bit. Maybe time to sell a little bit of the winners. AT&T is one that I've been talking about for a while. Hey, I bought it in the, I think it was in the $26 or $27 range and hit 31 plus today. And this is one that's yielding like 7%. I had to peel some off. I just sold 10%. Just peel a little bit off. Raise some cash. Probably buy it back at a lower price. We'll see. But I think some of those more defensive stocks that I've been talking to you about are going to do better in this environment. And as we open, by the way, I think this is going to be the first fully open sporting event since the pandemic is happening this Saturday. That's the UFC. So the UFC is in Florida. They're having a fully packed, sold-out arena in Florida. And, I think some of these first events that are kind of back, where things are starting to get a little more normal, will tell us how things look. My wife and I's anniversary was yesterday. We went down to the restaurant we met at for the first time in Little Italy called Civico 1845. It's a great Italian spot, awesome vegan menu for me. And I was really, really surprised by how many people were down there. I got to tell you, I think people are ready to get out and get after it. And if that's the case, here's the things we need to think about. And this is just the things I've been thinking about lately. Being cooped up and not having the ability to go spend your money on, dining out or entertainment or whatever you want to call it, has definitely caused people to buy a lot more real estate. And be more interested in real estate and be very aggressive in real estate. Will the opposite take place when we open up? In other words, will it hurt real estate somehow when we open up? Because people are not now just saving and hoarding money and looking to buy Dogecoin and GameStop. And if they have enough scratch real estate, will they now go blow their money on other stuff? It'd be great for the economy. Be great for those small businesses. I love supporting those small businesses. But will there be this unwinding of demand that we've seen from the pandemic for real estate? Is that possible? It doesn't seem like it would be. But maybe it will. So things to think about, things that I'm watching for, data that I'm searching out right now is based on those particular lanes. And as I accumulate more data on those things, I will definitely let you know. But wouldn't it be interesting if that was the real threat to real estate, is that people would just get distracted again? One of the nice things about the pandemic was it kept people, people stayed in their homes. They got to look at everything they hate about their home every day for long periods of time. There wasn't as many escapes. There wasn't as many other things to do. You pretty much had to hang out in your house. As we open up and people start getting back out, are they going to be okay with that condo again? Oh, well, yeah, it's not so bad. We just go for a run. We go for a walk. We go out to eat. Is it going to change things? Will it change the hunger for demand in real estate? That's a very interesting question that no one has really asked. And I don't know the answer, but I am going to be watching that very carefully. So if you get any information on that, if you hear anybody saying anything, please let me know. As everyone tends to do on here, I really appreciate you doing that and cluing me in when you see interesting things happen, when you see things happen with transactions, when you see things happening in the market, letting me know. It's really, really cool of you to do that. But that's going to be it for today. So it was a great day to lock. Hopefully you pulled the trigger, as I recommend, because the risk reward makes sense today to pull the trigger on locking. That said, if you're a gambling man or woman, feel free to float, and I will wish you the best of luck. We'll check back in tomorrow to end the week off and show you how things look and how things are projected to roll out on Monday. This weekend should be very interesting for a number of reasons, not just because we're having that first live event, but there's other things going on as well, which I'll talk about tomorrow. I'll see you guys then. Take care.